Good afternoon, everybody, and thank you very much for joining us. We have another session of our webinars today, and I have the pleasure of introducing two people for what I hope will be an extremely interesting perspective on the current state of venture, as well as the relationship between LPs and GPs in the region. We have Stergios, who is the CEO of the family group, the Kanoo Group. And we have Noor, who is general partner of Global Ventures VC fund here in the region. And Noor kindly invited Stergios to come and join us as an LP in their fund. And one of the things I think is quite interesting for us to explore as a dynamic, especially during the current environment, is this LP-GP relationship for many reasons. Number one, for me, I think it's very important because startups tend to forget that the VCs that you're speaking to have their own investors. And it's important to understand their mandates and what it is that they're doing and why they need to show a return to their investors. And also to try and understand what is the appetite for venture as an asset class in the region from the likes of family offices like the Kanoo Group and the wider LP community as it continues to grow. And then we'll focus specifically into the current situation and how their views and thoughts are for that to go further into the year. Again, if you have any questions, please share them in the Q&A box and we'll be happy to get to them. We'll spend about 20 minutes discussing this between us and then open up to questions for anybody on the call. So number one, thank you very much for both of you for joining us. Stergios, if I can just dive in and jump into you. I mean, if you can just give it a little bit of background, what the Kanoo Group is, and then more specifically, what attracted you to venture as an asset class and why it was interesting for you as an institution.
Sure, thanks, Philip. I mean, the Kanoo Group is a family conglomerate, as many people in the region know, has been around for many, many years, since 1890. The family members have been successful entrepreneurs themselves with many startups and also strong partnerships with other innovative businesses from outside the region that's set up here. So the way we look at it at VC today as a group, 130 years after the founding of the group, is that we need to keep innovating, right? Sometimes we can do this in-house, in the group, and sometimes we need to do it by partnering with the experts. And that's why we invest in VC. I mean, also from an asset allocation perspective, from a diversification perspective, you have to allocate in VC anyways. But we look at it also more strategically to get access to new ideas, new business models, innovative models, and see how we can also add value. So it's financial benefit, but also value-adding role and value-adding perspective when it comes to innovation and VC. And that's how actually we partnered with Noor's fund, Global Ventures. We have a very strong, good relationship, interactive, and I will come to that when we talk about relationship and communication between GP and LPs.
And for anybody on the call, just to double down on that, why is it that you choose to go through the VC route as opposed to investing directly? What is it that you hope to get by investing through a fund that would alternatively be done directly?
We can do both ways, right? And so we have quite a dynamic investment program on which we allocate also through funds, but not only in VC, we have many asset classes. And we have a direct investment division within Kanoo Capital. So there is one direct investment aspect, but there's also one more dynamic fund of funds allocation, where though we want to play a more value-adding role with our asset managers. So sometimes we participate in investment committees. I'm talking about the region, right? And see how we can actually extract and add value.
Okay. And then Noor, I mean, to flip it on its head, I mean, I'm sure people would love to hear a little bit about Global Ventures and what it is that you do, but explain what it is for a GP to be fundraising from LPs and how it's similar and potentially different to how a startup fundraises from a VC.
So thank you for having me. I think it's great that you're hosting these webinars, Philip. We look forward to them
Thank you.
Every time and every week. So I think from the VC perspective, raising money is really about raising a pool of capital that's opportunistic. So we like to think that we know exactly what we're going to invest in, but I think that when we talk to LPs, we have some semblance, and sometimes we've made some investments, but we're still asking people to trust us that we can go out and we can find all the opportunities and then select the ones that we believe will create the biggest return. So that's how it's the same but different. It's the same in that you're trying to raise capital. It's different in that we don't have a company with a balance sheet and operations and revenue and a clear vision for a certain product. We're simply asking someone to trust that we can find all of these different products that are relevant and pick the best ones. So the experience of how we can help companies grow becomes a lot more important, because then the LPs need to have confidence that we can actually leverage that and multiply that, because it's more than one company that we're helping grow. And the confidence that we will see the most interesting deals that are the most relevant needs to be there. So it's a lot more personal, a lot less company.
But I guess, sorry to jump in, but it's quite interesting. So when you speak to a startup, you're like, okay, you have to have a product market fit, a good team. You've got to have all of these kind of criteria. When it comes to a VC, what's your differentiating factor? How do you differentiate versus the others? What is those kind of metrics that an LP would be looking for?
Why don't you ask the LP? I mean, I can answer what I think they are, but Stergios is right here.
Sure.
So.
Well, we hear both. Okay. As an LP, what are those factors that you look for?
I mean, we're looking we need first of all to connect, right, with the team. When it comes to VC, we're not talking about mega funds, buyout funds in PE. We're talking about small teams, it's more dynamic. So first of all, we need to connect and believe in the team. They need to have a very good relationship amongst themselves and see that there is a long-term perspective there. There's no risk, first of all, with the people. They have the right strategy, they have the right track record. They need to wear sometimes or to understand, how the founders feel. So they must have founded also companies on their own. So they are more experienced from that perspective. And access, right? I mean, the communication that you can develop with the GP, see how you can, add more value, as I said. And we have a great relationship with Noor, and I think that's great for all the other LPs who are into the fund. So, and that's what we actually highlight from a GP selection point of view. In VC, right? There are other asset classes where, there are different attributes.
Maybe Stergios, we need to do a content piece so that we can come up with a crib sheet of what are the things that you look for when you're looking at the VCs in the region. And then we can do a little benchmarking exercise for the region. Yeah. But I guess back to Noor, because whenever you give advice to a founder, it's you need to do your due diligence on your LP, on your investor, your VC. I'm sure that you have to do the same exercise. And what is it that you're looking from an LP versus other LPs?
So, like all founders in the region, we struggle to find capital because it's a nascent ecosystem.
Yeah.
And I joke that I wear a founder hat 80% of the time and an investor hat 20% of the time, but it's actually quite true. So when we look to LPs, we look the same way we advise founders to look at their cap table, which is who can be strategic, who can be value add, who can help you grow. So for us, our LPs that help us grow, like the Kanoo Group, are ones that engage with our portfolio. So to the extent that the Kanoo Group's operating companies can become clients for our portfolio companies, which is why we prefer to do B2B, right, and enterprise tech, so that our LPs can, which are, have operating assets, access to operating assets, they're either CEOs or family conglomerates, can actually leverage those technologies. They can help us diligence those technologies in terms of, do they apply in the industry? Are they genuinely useful? They can help the founders find better ways of product market fit. So we don't invest very early. We look at companies that have about $1 million in revenue. And that way the question becomes, how do I go from 1 million to 10 million in 2 years? And part of our answer is, well, let's talk to our LPs and see if this solves a real problem in the industry. And then can we leverage that network to help them grow revenues? So we look for really smart strategic capital to help our portfolio companies grow and to help us do better diligence. And that's exactly what we tell our founders to do. So we have a portfolio of 14 companies, and when they go out to raise money, we say, think about your cap table. You want smart strategic people who will get you to your next level or your next round and help you scale. So it's very much the same, and that's why working with Stergios and the Cando group is fantastic, because we send them a company and say, we're looking at this. You guys are in the space. What do you think? And it's really a two-way relationship.
And I guess, Noor, it's in your name. It's Global Ventures. So unlike some of the kind of more regional VCs who may be looking for regional LPs, I assume that you also have reached out to international LPs. Is that with an ability to try and help your startups grow into international markets?
Yes, so we have, I would say 60% of our LPs are based outside the region. So either in the US or Europe. And that's, we like to think that that's by design. They also are looking for new areas to do VC. It means that our founders are able to cross those bridges more easily. So again, when we look at companies in the region, we can vet and validate what's happening globally in that space. What's the next level? Are we building something that's going to work or not going to work? If there are hurdles globally in building out this kind of business model, what were they? Do they apply here? Right. So our international network really allows us to do that. And then 70% of our founders have grown internationally outside the Middle East and Africa within a year of our investing. We won't take full credit for that, but a large part of it is the ability to make introductions and to find the right companies in the region and the right founders that think globally. So the intention is genuinely, they call it reverse innovation, right? So it's innovation out of emerging markets that's going into the US and Europe. So we believe it's possible. We believe the founders here are fundamentally stronger than founders globally. They have to overcome more hurdles. It's harder to build companies in this part of the world. The capital is more scarce. You have to be born global. So really, think about the region as your market, not just your country. And so by the time the founders get to a Series A or Series B, they're actually in a much stronger position than most founders we see globally in a Series A or Series B, and have the ability to compete on a global landscape.
Cool. And so let's try and bring it to the now. And I kind of asked a question to both of you. Stergios, speaking to yourself, I mean, how has the risk appetite been from the family prior to what's happening? And how has that shifted given the current environment? Do you see it opportunistically to invest more in it as an asset class, or is it a wait and hold situation? And then I guess I'll come to Noor and ask, what are the LPs or the general LP population you're speaking to giving you in terms of feedback?
Well, from a VC allocation perspective, I mean, there is always, an approach on how high are the valuations. So we're not investing in the US. If you invest in US venture capital, you know that the valuations have been like extraordinarily high. And Europe, not as much. But in the region, we found that the universe is still at a normal valuation even before COVID.
Music to all startups' ears.
But now we see that actually that's one of the best vintages coming. I mean, 2021, 22. However, we see also the trends changing. So it's about, and that's what we communicate. I mean, we try to discuss with our GPs like Noor to see what are the new areas of focus. We see a tendency to go back to the basics through a digital transformation. So healthcare, food, energy, water, education. You see, I mean, like in one night, education transformed to be e-education. And you have also digital healthcare and so you see like rapidly changing trends or accelerating trends that we as a group, to keep with our innovation level, we want to be participants. We don't want to be out of this new world. So I think from a risk aversion perspective, allocating into the asset class, no, it's the same. But again, you have to select the right opportunities and have the right strategy.
But does that mean you want to do? Does that mean that you want to deploy more into this period, or you're happy with what you've deployed and you're just going to sit back and see it right through?
No, we want to deploy more.
Okay, and then Noor, I guess you're speaking to a much wider kind of community. Let's talk from an LP perspective, not the VC community themselves who are doing it. What are the LPs? I mean, it's taken us a huge amount of time. You've had a great career in the venture space in the region. You've grown with the ecosystem at large. And we've done a huge amount of work as an ecosystem to make it an attractive proposition. And I believe that that really was beginning to see the rewards of that. But now this has happened. Are you seeing people shy away, or are you still seeing people interested in the same way as Stergios was saying?
I think people are still interested. And I think that there's an acknowledgement that, this is the beginning of a down cycle. It's easy to show data and statistics that show that, funds that have vintages at the beginning of down cycles or the bottom of down cycles outperform those that have vintages in up cycles. I do think there's a little bit more resistance or reluctance just because it's driven by uncertainty. And I think that when you pile risk on top of uncertainty, or in this case, uncertainty on top of uncertainty, right? And ventures by nature, high risk and high uncertainty, people do get trigger shy, which I think is normal. And I think that, the region typically tends to follow a little bit abroad. And I think large pools of capital have been hit in markets perhaps, and then they need to take a look at their portfolio and their allocation, and the percentages need to be a certain way. And so if your public market percentage has just shrank by 30%, then in theory, so should your VC percentage if you're fully allocated. And so that by nature then has the trickle down effect of less capital into venture because public markets are doing poorly. So that's not just at an institutional level in the US. Family offices here are very much institutionalized and think the same way. So venture is no more than 5% of my total assets, and total assets have just shrank, venture is going to shrink. Unfortunately, it's shrinking off a small base. So we all feel it gets pinched. So we haven't seen that yet. We just anticipate that.
And if I may, I mean, obviously in the last couple of months, if not the last year, there's been a huge effort by sovereign entities to try and fuel the ecosystem. Now they're all dealing with current crises in their different geographies politically, and you've seen oil take a massive dive. Have you seen any change in behavior from potentially sovereign LPs or are they still committed to the cause of what they've set out, and they see it as a much longer term play than just the current 6 to 9 months?
Yeah, sovereign LPs in the region have been very strongly committed to the cause. And to the extent that we can see they continue to be. It's a very important part of the ecosystem, and more important now because of what's happening than before.
Okay, awesome. And I guess just interesting to see the dynamic. We keep getting told as startups, stay close to your investors, keep them updated, send them weekly, monthly updates on what it is that you're doing. Does that relationship remain the same to the LPGP? Let's start with Stergios. Are you hearing from Noor every week?
Now I see Noor every day. I mean, I hear from her every day, right? That's why, I mean, it's been, how long now? 2 months since this really erupted. And to me, it feels like it's been 2 years. Because, the communication that you have, not only with Noor, but in general, but with Noor also on the VC side, we have continuous calls, I mean, we have updates on the portfolio, we know more, I mean, there is full transparency, right? And actually I can tell about the team with the founders that they give us as LPs a feeling of like, this is an ecosystem, this is like a family. I mean, that's because when you deal with VC, you deal with people. You don't deal with large enterprises, corporates. That's a different type of communication you expect. But here you want to be close. You have to stand by your founders and make sure that through this crisis, which is an unprecedented crisis, right? You are there to guide them. And we as LPs, we are also there, not to monitor, but to make sure that, we can add value, we can help wherever we can. At the end of the day, we want to make sure that our investment is secure and our returns will be there at the end.
And just out of interest, following on from the conversation with Noor, but what you alluded to, when you speak to other family offices in the region, are you seeing them more interested in venture as an asset class? Is the FOMO kicking in, or at least was it kicking in before the current crisis? And do you think that this will continue to grow coming out of maybe 21?
Yeah, I think there is more interest into technology. I mean, it's a fact. You see people who have always neglected communication tools to conduct board meetings over, Zoom or Microsoft Teams. So this is a fact. That's why I'm saying things change very rapidly within a month. Also in the mentality and culture of some of the family principles in the region. I cannot talk about my family, I mean the Kanoo family only, but in general, right? So they see that they have to be more focused on technology, on digital transformation, And this might actually create new opportunities in the VC space and the startup space. There is a hype also, let's not forget that. I mean, over the past month also, I see there is a big hype
for sure.
In groups, in investors, and we have to be careful about this too.
And so, Noor, when you hear that, and that's an excellent point, where's the opportunity for the ecosystem over the next 6 to 9 months? We're in kind of unprecedented times where you could theoretically break down some of the historical barriers of the region, whether it's the scalability into different geographies, whether it's closer relationships between VCs. Where do you see the opportunity from a venture capital perspective? I mean, obviously you have the MAGNiTT VCA as well. How can we use this opportunity now to build a stronger unit as a MENA venture investment space?
So there has been a lot of collaboration amongst the VCs over the last month or two. I would say more than before, just on a day-to-day basis. And that's great. That's definitely one way to get the ecosystem to collaborate and to work together. And I think that, you know, as an increasing amount of capital flows into the ecosystem, there'll be more and more collaboration amongst the VCs because the funds will be a little bit larger and the ability to support each other's companies will grow. And I think that's part of the evolution of the ecosystem. I think the opportunities lie in, you know, different sectors. So I think historically it was really e-commerce, which now is a massive opportunity again. So we're looking at e-commerce in the region because of COVID, the same way that Asia was looking at it after SARS. So pre-SARS, Alibaba was a struggling company. And then you had SARS and Alibaba became massive. And so I think that the regional inflection point in e-commerce is probably going to be now. When we take a look at other industries, you know, healthcare and health tech should be massive. So we have in our portfolio over 300 companies in our pipeline, over 300 companies in that space. And we think that now their ability to raise money and scale will be faster than before. Similarly with food tech, as you mentioned earlier, so anything agriculture, education related, the future of work. So we don't think that work will go back to the way that we've known it for many years. So what does it look like? So any platforms that enable a different vision of work. There's opportunities all over the place. And I think every kind of crisis presents different opportunities.
And we've been doing lots of webinars and different people have been giving different perspectives. Ultimately, the first couple that we did was about 6 weeks ago when everything just hit. And the advice from Sharif at the time and Waleed was, right, you've got to do a SWOT analysis, see where you're at, take specific hard decisions and try and evolve. And then Waleed, which was a couple of weeks later, was try and see where the opportunity is for your company to potentially create a new product or something new that can help you in that fundraising process. If startups are listening now and wanting to fundraise, now that there's been a little bit of time, about 6-7 weeks of this has come to fruition, what's your advice to them now when it comes to positioning themselves to fundraising?
You know, I think it's always go to where the ball is going, not where the ball is, right? And I think that I'm always consistent with that. And it's in 6 to 9 months, what will investors want to see and what are the questions you're going to be asked, right? So forget what investors want to see today. And investors are fickle. You know, there tends to be some sort of groupthink. It's inevitable. So you need to be able to show how you're adding value in the new economy, what you're doing in the new economy, why there's so much opportunity for growth. And that's what everybody invests in as a VC, is the opportunity for growth. So in 6 to 9 months, will people still be doing 16 Zoom calls a day? Unlikely. You know, what will people be doing?
Hopefully.
Try to do that, right? so that's what I would advise founders is once you have your stable ship and everything's under control and you've done your optimizations and your streamlining and you've gotten through the operations and you're set. If you want to think about fundraising, think about 6 to 9 months from now. And the questions you're going to be asked are, how did you streamline during the crisis? Who are the employees you let go? Why did you let go of those employees, not others? Can we speak to them? So how did you maintain a strong...
So you would be going down to that level of conversations to understand some of the strategic decisions that you took.
Why did you take these decisions? And as investors, you know, as VCs, we expect our LPs on our next fund to ask us, why did you invest in this company during the crisis? Why not this other company? What did you look at? Right? And it's, you know, everyone is every decision you make now is going to be scrutinized for, you know, 6 to 9 months from now if you are raising money, right? So why do you hold back more would be a question we expect LPs to ask us. You should have stopped investing and seen where things land, is a perspective of some LPs. Other LPs would say this is the best time to invest. No, you need to go even deeper into your companies. So you have to make a judgment call. There's no right answer, but you have to be able to defend your judgment call. And so that's the same advice I would give all founders, is make the right call, but be convinced and be ready to explain it 6 to 9 months from now when we hopefully come out of this.
Simple question to both of you. Are we expecting to see a slowdown in the summer, or are we going to see a pickup in the summer? Is this going to be a traditional summer for the Middle East, or given that it's already been somewhat of a challenging start to the year, people may actually stay busy throughout the summer period? Stergios, can I ask you that first?
Busy in investing or busy in living?
In the venture space, let's call it. Well, let's say in general, but let's see how that translates into the venture space.
I think now we are collecting, right? I mean, now we are discussing, we're evaluating the new dynamics in the VC investment space. So we're talking with our existing GPs, but also we are evaluating what's next. So we are collecting in terms of pipeline and opportunities. And I think from September, I mean, I hear that already, and it's also in my head that I say September. However, even before September, we might see some people investing even in June in some things that were already maturing, and actually now it's better. That's the best timing. If they have a strong pipeline to execute, I mean, the sooner the better, right? If you can get also, IRR is a simple calculation. It's entry value, cash flows, and exit value, right? So right now you expect also to get better valuations. It's simple.
And Noor, do you see that from an investment perspective from a VC? Are you going to have a busier summer now, hoping that maybe things get better and you can deploy more? Or are you also going to have we'll wait until September kicks and the summer season kicks, the post-summer season kicks in then, which has been traditional from all of our data over the last couple of years?
And that's not exclusive to the region, Philip. I think if you take a look at the US, excuse me, Europe, it's everywhere. I think for us, it's business as usual for now. So we just closed an investment 2 weeks ago. We're looking at new opportunities all the time. So if founders are busy and ready to pitch in the summer, we'll be ready to listen to them.
Awesome. So anyone who has any questions, please can you share them now? I'll just ask one final question. Obviously through MAGNiTT and with Basel, we always have a running joke that I make predictions at the beginning of the year. My prediction was that we hit $1 billion. Obviously that's not happening. I did caveat that by saying that there wasn't going to be any geopolitical outbreaks, which was in reference to certain tensions in the region. But I also kind of applied that to any extraordinary circumstances that happen. Where do you see the venture space at the end of this year, and how do you see it kind of developing into 21? If I can start with Noor first, knowing the market dynamics and the numbers that we've had for the last couple of years.
Well, you're the expert on the numbers. I'll just give a high level perspective. I think we'll see more happening in the venture space. I think that there's definitely a lot of opportunities that are coming to fruition now. A lot of companies that are raising capital, and a lot of governments and family offices that are very supportive of the ecosystem and realize not just the investment opportunity, but also the necessity of this ecosystem. Okay,
Stergios, yourself?
Well, from an allocation perspective, I expect a contraction. I don't see, but again, you know, it's the vintage question, right? Do you want to invest now by September, or you want to hold and wait until January, February? I'm talking now not about us only, I'm talking about different types of LPs, and they all have their own schedule in terms of deployment. However, it's vintage, right? And you have to deal with uncertainty on the one end, and it's risk and opportunity. So that's the big debate with investors, I think now. Let's wait for a few weeks. I mean, also, we want to see where the markets are. The real economy just opened. I mean, in Europe, in the US, it's still not open in the region. So we want to reflect to that, and we build our pipeline. Then the entry point, we will judge, we will assess, and we will do it.
Excellent. Cool. So I'll ask some of the questions again. If anybody has them, please share them in the Q&A. Simple one to start off with. Which sectors does Kanoo Group target to invest in?
Well, I cannot say much in full disclosure, but I mean, usually business groups in the region like us, we want to be close to our DNA. First, in what areas we are. So we are an industrial business group mainly, and we like tech around it so that people can understand. I'm talking about if we do any co-investments or direct, but also it's a matter of diversification. So we see, as I said earlier, we go back to the basics. It's about food, agri-tech, we like it, healthcare inclusion, energy efficiency, sustainability, water, education, right? I mean, let's see how education will be done over the next decade or so. So we want to be part of it. Therefore, we're looking for investing into digital transformation through the basic industrials like oil and gas, for example, we're doing a lot there, right? So how can we optimize? How can we make these sectors more efficient? So that's what we're looking at.
Noor, a question that just came to mind. Yesterday, we saw the merger of EMPG and OLX's businesses here in the region, claiming to now have raised something like 150 million to be valued at $1 billion. When it comes to M&A activity, is this a right time for M&A activity? And are you speaking to your portfolio companies that may have cash, or even supporting them with additional cash to see potential distressed acquisitions or mergers as an opportune time to do so?
Absolutely. And it reminds me a little bit of the 2008 crisis. So we were fortunate enough to IPO in April 2008, which meant that we were fortunate enough to have $400 million in cash sitting on a balance sheet just before the financial crisis. And 2009 and 10 were the best times ever to do M&A in our industry. And this is very similar to all those founders that have just closed rounds in the last 6 months. I wouldn't say that now is the opportune time to do M&A, but perhaps 3 to 6 months from now. Now is a great time to start conversations because some companies were out fundraising, and clearly, they may or may not be able to complete those raises. So M&A using share swaps, using structured finance, there's a lot to do there, and I think that we'll see consolidation over the next 12 to 18 months, which I think will be really key in terms of the evolution of the ecosystem, in terms of companies raising larger rounds because they are actually an accumulation of companies and becoming larger and stronger and more cross-border with solid foundations.
Interesting. So just like back to the question of what do you encourage them to do now? If you're my investor, you're coming to beyond the SWOT analysis, what would you say the focus should be for the next 3 months? Revenue growth, profitability, optimization. What are you telling your startups to be focusing on right now?
So I think what we've, one thing we've asked our startups to do is say, if you did not have a company, but you were in this space, where do you see the space going? Now that you can visualize, what is going to exist in 12 months, or what does the current market want in 12 months? What do you currently have as assets that can help you get there? Right. So a different way to do a SWOT analysis, but let's not get bogged down by legacy. The best entrepreneurs are those that continue to pivot and continue to innovate. And the second you start to think of your company as an asset, as a company asset, then you stop innovating because you want to maintain that as it is, rather than say, what can I draw from that to really put me in a position to win? So we advise our startups to kind of go through that exercise just on a thinking basis, and then identify what their best assets are. It's a great time to take risks as a startup. So anything you've been wanting to try, but haven't yet tried, is kind of forgiven. So, Mom's World, for example, got rid of cash on delivery, which is something they've been wanting to do for a very long time, but it's a very risky thing to do. Their sales did not go down. They continue to go up, right? And I don't think that we'll ever go back to COD in some companies, right? So it just doesn't make sense anymore. So I think it's a good, we tell our entrepreneurs, try new things, visualize what the future looks like. How can you get there? Build out new business lines to help you get there. But don't just try to save what you have, right? So play offense, not just defense. And so that's what we advise our founders to do at this point.
Awesome. There's a question saying, how long does Global Ventures take to perform due diligence? And then more interestingly, are there changes in the key metrics and unit economics that you're looking at now, given the current situation?
So how long does it take to perform due diligence? It depends. We've done some in 2 weeks. We've done some in 3 months. So it depends on the responsiveness of the founder, depends on how ready the DD room is. It depends on feedback, because we talk to clients, we talk to, former team members, right? And so if the feedback's pretty consistent, that makes our DD easier. If there's inconsistencies, we need to do more DD. So each layer of DD either checks a box or opens up another layer of DD. It's not the fun part of the job, right? We don't enjoy doing DD. If it's taking a long time, it's not because we want it to take a long time. And other companies, we've literally done it in 2 weeks. It's been very, everything's been ready and we were able to go through all the documents. Yes, we do look at different metrics. So I think that that's why you have, some companies like Uber, Airbnb, and others that are born at the bottom of down cycles or as markets collapse. It's because those founders may not have been funded a year prior. What VCs start looking for at these times is visionaries. So it becomes, I'm going to build $1 billion company, and here's a crazy idea. Those are much more welcome at this time because we can also take more risk in some way. We also have to make big bets, right? And we have to really have conviction in the founder. So, globally, capital was in abundance before, ideas were scarce and capital was in abundance. And you had to find a way as a founder, you could play the VCs off each other. You didn't have to be really cutting edge to get funded in most parts of the world, right? When it comes to capital is scarce, you have to be saying something different. You have to have that much conviction as a founder, and you have to create that much conviction in the investor because capital is scarce. So the best founders get funded with the craziest ideas and the best execution. Whereas before you would have the second best get funded as well. I think our part of the world, it's always been capital is scarce.
Yeah, that it has been. But yes, that's an excellent point. And I'm gonna ask the question because it's written, but it's exactly the same as what you've articulated. And maybe I'll ask for Stergios' view this time. Some of the most iconic companies today were started during previous recessions and global economic crises, Uber and etc., which you mentioned. What learnings did you as VCs and LPs take away from this? And does this restore and reinforce your faith in the investment ecosystem and environment? So a little bit of a continuation of what Noor was saying.
Yeah. I fully agree with this statement. I mean, this is one of the most inspiring periods, right? Of course, we're going through a healthcare crisis, but it's also inspiring, right? So we all reflect and we come up with new dreams, new ideas, and we need that, I mean, as a catalyst going forward. So I was reading a very interesting article yesterday about backcasting, not forecasting. So now actually that's the best time to backcast, like to see where I'm gonna be in 5-10 years and work it backwards, right? And you come up with the best business model that you wanna, develop as a founder. As Noor said, right? I mean, this is the kind of ideas we need now, not just how to solve a problem of today during the COVID crisis. This is something very temporary.
Yeah.
However,
it's quite interesting yeah, sorry.
Yeah, it's just following the new trends in the new norm, but also this new dream.
Just interesting because I'm reflecting on myself, and that's what I've been saying to the team is that we've been so reactive in the last couple of weeks to trying to adjust to a new norm, making sure that everything's okay. I actually had to take a step back 2 weeks ago and just say, we're not being selfish enough to see the opportunity for MAGNiTT because we're trying to just make sure everything's fine. And what you're both kind of saying is you do need to be thinking very much forward looking and even kind of dreaming to see what are the opportunities that you can build out and build that risk appetite to try it, because now's the time to do that. There's a question here saying, 2 questions. How can a founder protect the startup core idea in a market full of copycats? And at which stage does Global Ventures invest in startups? And what is the best way to get in touch? Well, get in touch. You can connect with them on MAGNiTT. But on what stage do you invest? Maybe just to share a little bit about the mandate of Global Ventures, and specifically on a startup that is core idea of market full of copycats. How do you differentiate yourself?
So we invest Series A and Series B. Opportunistically, we do things a little bit earlier, but those are few and far between. How to protect yourself. It's one of these sorts of things where it's really about execution. So we believe that lots of people have the same idea. It's about making it happen. It's about executing it better than other people. It's about building a moat around you. And those are the founders that ultimately can build companies and scale and get funded and win. And I think that everybody has that in them when they're genuinely passionate about the idea. I was raised, my mom used to say, where there's a will, there's a way.
Yeah.
So it's about the way, it's not, and having the will to do it. It's not about just the idea and then not getting up to build it. So you don't really need to protect yourself from copycats. You just need to build better and faster than they do.
There's a question from Ramin who's asking, if low oil price levels are to continue, will that be dampening the market further for SMEs in the region? And will that result in investors hesitating to invest in the region?
Well, I take that. That's where the governments need to support now, right? I mean, with all the stimulus and how to lead to diversification. I see a trend here of decarbonizing. So the region has to realize that, and that's where SMEs and startups, right, come to play. So we need to diversify and we need to transform in this part of the world and the surrounding countries if we want to face the new reality. Otherwise, if we keep being oil dependent, we're gonna lose the game. That's all. And the governments have realized that a long time ago, right? When they built all these new business, the Vision 2030, etc. So now actually there is more need to support the SMEs, new ideas and startups. And that's where the universe is gonna grow. And that's why Noor is gonna be happy and will be happier.
Very good. Thank you very much, guys. I'll ask one more question before we finish. And everyone keeps asking the same question, and I'm going to ask it, but I want to make it more specific. It's not about what are going to be the hot sectors in investment, because we know it's healthcare and etc. Within that, what do you think will be, if we have this conversation in a year or maybe 18 months, which type of companies, I don't need names, do you think will be the breakaway success stories of the Ubers and Airbnbs of the generations past that will come out of the current environment? Where do you see the breakaway success stories for the region? Maybe Noor first, and then I'll finish with Stergios.
So, there are certain companies that, I'll answer this a little bit differently. There are certain companies I would like to see that we're not seeing, right? Okay. And there's no reason for them not to come from the region. So if you think about ed tech and education, everyone's building out all these little ed tech platforms, and there's about 1,000 of them, if not 2,000. Historically, content's been the biggest bottleneck in ed tech. Content's no longer a problem, but that means that content and these platforms have become a commodity. So if you want to take a look a year or 2 years down the line, what does education look like? Well, there's got to be a platform. There's got to be a dashboard where, as a parent, and I have 3 kids that are all homeschooling, if there was one place where I could go as a parent and see, what is my son doing? What has he not done yet? And a dashboard or a platform that integrates APIs into all of these different ed tech verticals, that is the future of education, right? So it is effectively your school, but online, but not your school. It is your holistic child, right? Which is what everyone's going, personalized, etc. So I can drag and drop things. So platforms for education rather than all these little content plays. Anywhere where you see an industry being changed so quickly and bits and pieces being built together that it becomes a commodity, ultimately, you end up with a platform. And that's what Uber was, that's what Airbnb was. These are all platforms. So what are the industries that need new platforms? Education. What about agri-tech? Everyone's building vertical farms. Can anyone tell me the softwares that are actually running these vertical farms? Right? There's a couple around the world. There will be a lot more. And the data aggregated from these softwares and the way they operate as SaaS, and they are all MRR, so they will get the higher multiples and valuations. But we haven't seen anyone building the softwares. We've seen everyone building the farms. The farms will become a commodity. The software becomes the platform. And so that's how we need to think about it. Within the industries, what are the platforms and infrastructure that's being built to support the growth of the industry, rather than the small companies that will be built?
Interesting. Stergios, any views?
So what I've noticed is that the region has been flourishing, right? In terms of wealth, in terms of youth, in terms of talent, but we keep being net importer of food. And now this is going to Noor's point, right? About agri-tech and food security. So I would like to see more platforms from that end. We keep being net exporter of healthcare patients. So you would like to see that here, because now you will not be traveling, right, as much also. And then it comes to education for undergrad and postgraduate studies. So I'm worried about unemployment globally and also in the region. Like Saudi has a very young population, 50% below 28. You see Egypt, you see more populated countries, what is going to happen, right, after, during, and post-COVID. So we need to train people, we need to educate, and develop a more specialized education system through platforms in order for them to become socially, I mean, more value-adding and have a role in this new era. So technology comes to play there. So I want to see more platforms as well on education and energy conservation, water preservation, conservation as well. So which comes to play again with sustainability, more efficient in terms of energy consumption, energy production, and transformation overall, right? And that's where, again, government with entrepreneurship come to play together. And I see, you know, the region, I mean, the 6 countries have been very proactive on that. So I'll see now they will be pushing more.
Well, so for anybody who is on this webinar looking for an idea, there you go. You had about 10, 15 ideas that you can come up with, and take Noor's advice: be visionary, be different, be bold, and come up with a game-changing idea that you can come out of it. And I think that's great advice, even for us founders who are coming to a new norm, is to really take the opportunity if you have cash. Obviously, each startup's in a very different situation, but if you have the cash and you're able to take the risk and do something different, now's the time to try and experiment and drive. So I'll be telling my team in the conversations that we're already having to apply some of that logic. Thank you very much to both of you. I really enjoyed the conversation. It's unique to have an LP that can explain their relationship with the GP. And thank you, Noor, as well, for opening up and introducing us to Stergios to be able to share that. I think it's extremely useful. And it'll be exciting to see how these next couple of months pan out. And in the interest of everybody in the ecosystem, we hope that the LP appetite for venture maintains. We hope that the GP investment continue and that we can get somewhere close to the $1 billion mark at the end of the year. But thank you very much to both of you for your time.
Thanks, Philip. Thanks, Noor.
Thank you.
Everyone.
Take care.
Thank you.